Have you ever heard the advice, you don't need LLCs for your rental properties? They'll tell you LLCs are expensive, complicated, or just unnecessary. But here's the truth. If you're a high-income earner, a doctor, lawyer, entrepreneur, anyone making 6 figures or more, that advice does not apply to you. In fact, skipping LLCs could be one of the costliest mistakes you ever make. Now, quick disclaimer before we dive in. I'm not an asset protection lawyer, and this isn't legal advice. I'm just sharing what we do and how we protect not just our assets, but also our privacy. And if you don't know who I am, I'm Kenji Asakura. I'm a doctor, serial entrepreneur, and real estate investor with over 25 years of investing experience. Over that time, my wife Leti and I have built a multi-million-dollar real estate portfolio, and we used LLCs every step of the way, not just to protect our assets, but to also protect our privacy. In this video, I'm going to take the 7 most common arguments people make against using LLCs, and I'm going to debunk them one by one. And I'll share some real stories along the way, including the time one of our properties made the news for all the wrong reasons, and how our LLC structure kept our names out of the spotlight when it mattered most. Let's dive in. Argument 1. Lawsuits are rare, so protection is overrated. Let's start with one of the most common myths. You probably won't get sued. There are people out there who argue that if your property is well maintained or if you have a property manager, the odds of being sued are low. And that might be true. Lawsuits aren't everyday occurrences. But that thinking misses the point. Here's the problem. Lawsuits don't have to be common to crush you financially. All it takes is just one case gone wrong to put your savings, your wages, and your reputation at risk. Saying you don't need an LLC because lawsuits are rare is like saying you don't need seatbelts because most car rides don't end in accidents. That one accident can change everything. And if you're a high-income earner, that risk actually goes up. You're not just any landlord. You're a target because people know you have deep pockets. And attorneys don't go after someone with no money. They go after the bigger fish. That's you. And here's something else the naysayers probably didn't take into account. Many high-income earners invest in short-term rentals because it's one of the only ways to shelter your income while still working full-time. But owning and operating a short-term rental also means the risks are higher. With every new guest staying at your property, your liability exposure goes up. If the average Airbnb hosts 65 to 70 guests per year, imagine how many times that means something could go wrong. And here's something most people don't realize. You're generally going to need to self-manage in order to meet the requirements for the short-term rental tax benefit. That can save you a lot on taxes, but it also puts you in direct contact with guests, which increases your chances of getting sued. So no, lawsuits aren't always rare, and you don't always have a property manager to protect you. And even if they were rare, it only takes one lawsuit to destroy everything you built. Next is the insurance is enough myth. Because if you've been relying on insurance as your sole protection, you'll want to see why that approach leaves gaps big enough to drive a truck through. Argument 2. Insurance is enough. You'll often hear, why bother with LLCs? Just raise your insurance limits or add an umbrella policy. Insurance already covers you. On the surface, that sounds reasonable. But here's the truth. Insurance does not cover everything. Policies are filled with exclusions. You'll often find exclusions for mold, tenant misconduct, certain types of negligence, intentional acts, and a lot more. And even when something is covered, you're still capped by policy limits. If your coverage tops out at $1 million, but you're sued for $3 million, guess who's on the hook for the extra $2 million? You are. And if you ever dealt with an insurance claim, you know carriers don't make it easy. They look for reasons to deny or minimize payouts because their job is to protect their balance sheet, not your portfolio. That's why the argument that insurance is enough falls apart for high-income earners. Because the truth is, insurance leaves major gaps. Now don't get me wrong, insurance is still important. I carry it, and you should too. It handles things like water damage from a leaking water heater or storm damage that destroys a roof. But when it comes to protecting your assets and shielding your personal wealth from liability, insurance alone is not enough. This is where LLCs come into the picture. They add a legal separation that prevents a lawsuit against one property from bleeding into your entire portfolio and worse, your personal assets. So the right approach isn't to choose between the two. You need both. Insurance and LLCs together form a real protection strategy. Relying on insurance alone, especially as a high-income earner, is like trusting a safety net full of holes. And those holes are exactly where lawsuits slip through. Next, let's tackle the myth that single-member LLCs are weak. Because I'm going to show you how, with the right structure, you can get the benefits of a single-member LLC without the downsides. Argument 3. Single-member LLCs are weak. Critics say single-member LLCs don't offer real protection. They're easy to pierce in court. And that can be true when they're set up poorly. But that's not how we do it. We use a Wyoming umbrella LLC that owns all of our property LLCs. Wyoming has some of the strongest protections in the country, even for single-member LLCs. They offer what's called charging order protection. That means if someone wins a judgment against you, they can't just take your property and they can't force your way into your LLC. The only thing they're legally allowed to do is sit and wait for a distribution. and you control whether that ever happens. Now, why do people even use single-member LLCs? Because they're simple. You get liability protection under state law, but the IRS treats it like a pass-through for taxes. It's easier to manage, especially when you're just getting started. So where does this idea come from that single-member LLCs are weak? Usually it's when they're set up in a state that doesn't offer strong protections, or they're managed so poorly that it's easy for a lawyer to poke holes in the structure and pierce the corporate veil. But here's the key. A skilled attorney can design a structure that actually protects you, because it's not the LLC that's weak, it's the way it was set up or operated. For high-income earners like us, a well-built structure with clean operations is a critical layer of protection, and single-member LLCs absolutely play a role in that when they're done right. Coming up next, we'll talk about one of the least understood but powerful reasons we use LLCs, privacy. And I'll share how our LLC structure kept our names out of the public eye. Argument 4. Anonymity isn't realistic. You'll hear LLCs don't give you real anonymity. People can still trace ownership. And sure, anonymity isn't perfect. With enough resources, someone can dig deep and figure out who really owns the property. But here's the reality. You don't need perfect privacy for it to matter. You just need to make it hard enough to discourage casual snooping. You need to keep it from being really easy for someone to connect your name to your properties. If you're a doctor, do you really want a patient to Google your name and instantly identify every property you own? Do you want them to see your entire portfolio, or worse, your home address? We've seen firsthand why this matters. One of our properties made the news one time after an electrical issue forced us to evacuate the tenants. The media jumped to conclusions and called us irresponsible owners, even though the fire department eventually cleared us of any wrongdoing. If our names had been tied to that property, we would have been pulled into the headlines, and both our professional and personal reputations would have been dragged through the mud. But because of our LLC structure, our names never came up. The story stayed about the property, not about us. That's the value of anonymity. It doesn't make you completely invisible, but it does put a layer of space between you and the property. And for high-income earners, that privacy can make all the difference. Up next, we'll look at the argument about the cost of LLCs and how the cost becomes a rounding error when you start to scale your portfolio. Argument 5. LLCs are expensive. Critics say LLCs cost too much. You've got filing fees, annual state fees. It costs thousands a year once you're running multiple LLCs. Why bother? Here's the reality. If you're a high-income earner, a small duplex making $6,000 a year in cash flow isn't going to make a dent against a multiple six-figure salary. So most high-income earners want to scale into bigger properties, which gives them meaningful cash flow and tax advantages. And once you're buying properties worth millions, the $2,000 or $3,000 a year it might take to set up and maintain LLCs is negligible. And what a lot of people don't realize is larger properties usually require commercial loans, and those commercial lenders require you to buy in an LLC because the lender is effectively your partner and they want the property protected just as much as you do. Now, if you're playing small, sure, the cost of LLCs can feel significant, but if you're playing a bigger game, you're not worried about a couple $1,000s here or there. You've got bigger things to focus on: finding great deals, managing larger properties, building real cash flow and tax shelters. The cost of LLCs, that's just the cost of doing business. And at that level, it's barely a rounding error. Now, if you made it this far in the video, you're probably starting to see how the arguments against LLCs just don't make sense for a high-income earner. And this next argument, that LLCs are too complicated, is no different. That's what I'm going to tackle next, and I'll show you why complexity is actually your friend. Argument 6, LLCs are complicated. Another claim is LLCs are too complicated. There's paperwork, annual filings, registered agents, operating agreements. It's way too much hassle. And yes, LLCs do add complexity, especially when you start adding layers: a Wyoming umbrella LLC, a separate LLC for every single property, trusts, even LLCs for management companies. But here's the thing, those layers aren't there by accident. That complexity serves a purpose. It strengthens the protection. It separates one property from another. It keeps your personal name out of the spotlight. And honestly, it's only complicated if you're trying to DIY it. Do you really think it's a good idea to DIY your legal work? Real estate asset protection is a specialized area of law. In our experience, even general real estate attorneys often don't know it well. That's why you want to work with experts who live and breathe this stuff every day. Once you outsource it, this argument that LLCs are complex disappears. The filings, the registered agent, the operating agreements, it's all handled for you. Meanwhile, your time is freed up for higher value activities: finding deals, building relationships, scaling your portfolio. So yes, LLCs add complexity, but that complexity has a purpose. And it's not your job to manage it. It's your job to hire the right people and focus on growing your wealth. Coming up next, we'll handle the last big concern. LLCs make it harder to get mortgages. This one scares a lot of people, but the truth about this one might surprise you. Argument 7. LLCs make it harder to get mortgages. Finally, some say LLCs make it much harder to get a mortgage. Banks don't want to lend to a new LLC without a track record. If you buy the property in your name and transfer it later, the bank has the right to call the loan due. Refinancing will be nearly impossible. That all sounds scary, but it's just false. And honestly, it's fear-mongering. Here's how it really works. Most beginners start with conventional mortgages, loans backed by Fannie Mae and Freddie Mac. They give you the best rates and terms, but there's a rule. You have to buy the property in your personal name. So what's the process? You close the property in your name, and then you transfer the deed into your LLC. And under current Fannie and Freddie guidelines, you're allowed to do this. It does not trigger the due on sale clause, and it doesn't block you from refinancing later. If you want to refinance, you transfer the property back into your name. Simple. So LLCs don't make getting a mortgage harder. You just need to understand the process and not be afraid of something the rules themselves allow. Now let's bring this back to high-income earners and drive home some of the key points of this video, because that's who this video is for. As a high-income earner, you're going to want to scale. We see this every day in our community. As I mentioned earlier, a little duplex making $6,000 a year in cash flow isn't going to make a difference for someone earning a multiple six-figure salary. To really move the needle, you'll want to buy bigger properties, because bigger properties bring bigger cash flow, bigger tax advantages, and the kind of scale that actually makes a difference in your life. And once you're in commercial properties, you're not using conventional loans anymore. You're using commercial loans, and those lenders often require you to buy in an LLC because they want their assets protected too. So the bottom line is this: the idea that LLCs make financing harder is irrelevant, because once you start scaling, you don't even have a choice. LLCs aren't a barrier. They're simply part of the path forward. So here's the real takeaway. If you're making six figures or more, skipping LLCs is like leaving the front door of your financial house wide open. That's why we use LLCs for all of our properties, and it's why almost all of our students do too. If you'd like to be referred to an asset protection company we use and trust, the same team that help us set up and maintain our LLCs, go to semiretiredmd.com/protect your assets. And if you want to learn how to scale your portfolio and start building life-changing cash flow and tax savings, just click the link below to book a free strategy call. Our team will show you the steps you can take to get started today. If you found this helpful, hit like, subscribe, and share this video with another high-income earner who's getting the wrong advice about LLCs. And if you're serious about protecting your assets and scaling confidently, don't miss the next video. I'll see you there.